So very good morning, friends. What is our planning for the day? Let me give an overview. We are going to focus on the portion which we taken very early. What are all the portion we are taken? First one of the main weightage area, cost audit provision and applicability. Normally theory question will come from there 15 to 20 marks. Sometimes it will come more than that also. Second thing, we are going to discuss the problem which we covered those time. Profit reconciliation, value addition, those problems which we discussed very early. So in the revision session, if you do very fast, you will be able to recall very easily and you can be able to complete your cost audit preparation. That is what our objective. So hope all of you are ready. So in this theory discussion, I'll also highlight So in this session, we'll also highlight what role the probable 2-mark question from section A. Section B and section C, I have given already booklet. Section B and section C, I have already given MCQ booklet. Beyond that, now MCQ question will come. But coming to section A, I'll also highlight how the question will come from in this revision session. Are you ready? So let us first start with, see, first one. So we are revising MCQ purpose plus concept purpose, both together we are revising. So hope all of you read the introduction and applicability, everything once. So that when I'm going through all the provision, you'll be able to recall it very well. Okay. So let's start. First of all, the cost audit is first time applicable from year to 1965. It's regularly coming 2-mark question. It's regularly coming 2-mark question. Which section is applicable at the time? There are two sections on applicability, 233B, 209, 1D. This is very rarely come. This is having no relevance. But anyway, I am just highlighting you the same. This is which act? This is on Companies Act 1956. This is not that much relevant, but anyway, because sections days only will come section A mostly on 2-mark. That is how we are discussing. This is the cost audit applicably which year 1965. Now coming into cost audit. Right now, which section, which act govern the cost audit? The govern the cost audit is Companies Act right now 2013. Which rule? They will give you 3-4 rule. Which rule govern the cost audit? So everything now 2-mark revision purpose, and also I am telling you for what main point also revision will go. So which rule applicable for cost audit right now? That is called Companies Cost Record and Audit Rules 2014. This is the rule which is right now govern the cost audit. Now next provision on 2-mark which can be discussed later. Which section deals with cost audit right now? So other than this provision, this is more relevant. Which section in Companies Act make it? So in Companies Act, yes, right now the cost audit applicability only one section. Right now Companies Act applicability on one section, section 148. Right now Companies Act applicability only on what? One section. So this is the point which comes for what? 2-mark in this area. I hope all of you are able to recall. Now coming into next level discussion. See, next 2-mark they can able to test you that cost records. What is the point? Cost records. In cost record, we know we have learned that cost record is a part of, we have learned it, books of accounts definition. Books of accounts definition will not come, but you have to understand the books of accounts include what? Cost records also. Books of accounts include what? Cost records also. So we discussed section 28, maintenance of what? Books of records. Yes or no? What we discussed, maintenance of books of records. Here we learned some provision which is relevant. 2-3 points are relevant here, which can be tested as a 2-mark question, or it can be directly one question. If a company is not maintaining cost records, what is the problem, or what they have to do? Here we have learned the provision called books of records, or cost records has to be kept by the company for a minimum period of what? 8 years. For a minimum period of what? 8 years. It will be available during the office time for the directors. If it is kept outside the registered office, it should inform the ROC. This kind of provision we discuss. Finally, if any of the provisions of cost records, finally, if any of the provisions of cost records is not following, it goes for what? Penalty. It goes for what? Penalty. Can you be able to recall the penalty? What is the penalty? Is applicability? Yes, it's very easy for remember. It starts 50,000, it goes up to what? 5 lakh. So that is very easy to remember. You have to remember 50, then 10 you have to add. So it will go to penalty of what? 50,000 to 5 lakh. So the penalty, we have only limited penalty only. That also we will able to recall so that we will able to learn one. So this penalty is for what? Maintenance of cost records. Maintenance of what? Cost records. Correct. Now we'll come to our main area. That is what? Section 148. Here comes the point called applicability of. See, if you want to apply first cost audit, first the company have the books of records. The first provision comes what? Applicability of what? Cost records. Applicability of what? Cost records. What is the provision tells of applicability of cost records? Very, very clear. Applicability of cost records that tells that either domestic company or a foreign company. That means foreign company also applicable. But there is a small exemption for foreign company. What is the exemption? If a foreign company having only, it's a 4 mark previous year question, license office, and they do only activity mentioned under serial number 33, then they are having what? Exemption. Otherwise, domestic company, foreign company, whether it is a regulated or non-regulated, aggregated turnover of the immediately preceding financial year in the covered product, in the cover, that is table A and table B product is exceed rupees 35 crore or more is exceed. So very, very clear for applicability of cost records, we won't look into total turnover. We'll look into the turnover of table A and table B together. So if table A and table B together, sir, what is table A? What is table B? Table A are regulated product, table B are non-regulated product. So table A and table B product, if you put together, if 35 crore are in the immediately preceding financial year, then it will applicable. My dear friends, let me tell you the main rule. Once it applicable, then it will keep on continuing. Next year, if they don't belong, comes 35, no escape. Once it applicable, then they have to maintain the cost record. Same provision will apply for what? Cost audit also. Same provision will apply for what? Cost audit also. Now moving into the next level. So now applicability we discuss 35 crore more. Here there is a one point. What is it by turnover? Turnover definition is not discussed in company's cost record audit rule. We have to read with Companies Act. Companies Act section 2 section 91 define what is turnover. Turnover means aggregate sum total of what? Supply, distribution, sale, everything of product and services. Both will be considered. Both will be considered. So that is how the provision. There is a one previous question. What is mid turnover? And they will ask you one question. Let me tell you practicability. Practically one question we did in our class also. They'll give lot of sales, sale, supply, scrap, everything, and they will ask you applicability. Can you compute? So you have to compute the turnover as per what? Section 291. That is the discussion what I am telling you. Helpful for you to solving case study model question also. What is case study model also? I will revise now. So clear on that point. This is what cost records. See, cost records, there are some exemptions are there. What are the exemption for cost records? The first one, cost record is not applicable for what? MSMED, which is covered. Which year MSMED Act, my dear friends? 2008. That is, if you are covered under MSMED Act, then for you, cost audit is not applicable. If you are MSMED, then it is applicable. Then one more point we have discussed in this provision, that is what is called. So applicability of cost record, main two exemption. One exemption we have already told, that is what? MSMED. Another exemption I have already told, foreign company. Foreign company, when it is exempted, foreign company it is accepted only if they have only license office and they do activity under serial number 33. In MTP also, I think there is one question on this foreign company provision right now. Now coming into next level, one more provision in cost record which tells that captive consumption of cost records. What is the point, my dear friends? Captive consumption. What is it by captive consumption of cost records? Product A is manufactured and it is used captively for selling of the product called what? B. So B is the finished product. B is the finished product, and A is the captively consumed product. So this is in-house manufacturing. So the point is what? The point is what? See, this A is a product, B is a product. We have identified that for cost audit, product is identified through CETA code. Product is identified through what? CETA code or HSN code, whatever you call. So when you identify it through CETA code or HSN code, see, your product will be on B product. So the provision is captive consumption applicability. Very, very important. See, if your final product is applicable for cost records, that is cost audit. Final product is applicable under table A, table B. Then no need of maintaining any record for what? A. See, you have to keep a record of products. You are manufacturing two products, A also, B also. The question is, A is captively manufactured, captively used for what? B. B is covered. So I am maintaining records for B. Do I want to maintain for A? Because A I am not selling. This is the question. A I am not selling. Now applicability very interesting. You are manufacturing only applicability. Turnover means sold the product. That is the reason this product also comes. So the solution is very simple. If your final product is covered under cost audit, then this captively considered product, no need of records. No need of record. If your final product is not covered for cost audit, if your final product is not covered for cost audit, then this captively consumed item, you have to maintain the record. Then there is a third case. This captive consumption product, some of them, this is used for not only A, B finished product, this is also used for what? C finished product. This is also used for what? C finished product. So what will happen? B is covered, C is not covered. So what happened? For B, captive consumption item you don't require, but C you have to require. That means depends upon the product applicability you have to make it. That is partially you have to maintain. What is the conclusion? Partially. I'm repeating the provision again because this and all, when you're revising from the book, it will take more time for understanding. In revision, we can able to discuss very fast. That is, if your final product is covered, the captive production not required. If final product is not covered, then captive production is required. If final products are 2 or 3, some of them are covered, some of them are not covered. When not covered, you have to maintain. Are you clear? So this is the main provision on applicability of what? Cost records. Now coming your favorite area, that is applicability of what? Cost audit. Applicability of what? Cost audit. This is discussed under section 148 section 2. This is discussed in section 148, but that and all will not come generally. 1-2 mark and all. They want testing this. This is discussed under section 148 subsection 2. We have to read with the rule. What the provision is discussed under rule only. Rule tells very clear. Rule given 2A. Regulated one applicability, non-regulated another one applicability. Regulated one applicability, non-regulated one applicability. What they tell for regulated product, my dear friends? Regulated products, they tell very simple. That is aggregate turnover of all the products. What is it by all the products? All the product of company. It can be regulated, it can be non-regulated, everything. It can be all the product. Very, very important discussion, my dear friends. You have A, B, C, D, A. You have A, B, C, D, E. This is a not applicable. This is table A product. Table A product. This is table B product. This is table B product. This is not applicable. This is not applicable. A standard example which will be able to understand all the case study. Are you ready, friends? See, first one I am discussing applicability for regulated product. Regulated product means this is table A, B only. How you compute? I am taking a practical example. Are you ready, friends? First step, you have to take aggregate turnover of all the products. What is all the product? Here it is 20. Here it is 20. Here it is 20. Then, or else, Here it is what will make it. Here it is will make another 20. Here it is will make 40. Here it is make 10. I've just taken some numbers. First step is what? We have to take a aggregate turnover of all the products. What is the aggregate turnover of all the product, my dear friends? Aggregate turnover of all the product is what? 110. What is the provision for table A? Aggregate turnover of all the product exceeds what? 50 crore or more. Here we have what? 110 crore. Here we have what? 110 crore. So first condition satisfied. Next, individual turnover of products covered under the rule exceed rupees 25 crore. Here very important. You have to take covered product. See, table A we have covered, table B both you have to take it because covered product only. They are not regulated. You take regulated only. You take all the covered. What is this? 40. Or you will take this as a 10. What you will get, my dear friends? What you will get? 32. Is it above 25 crore? Yes or no? In such a situation, table A product, that is product B, cost audit is applicable. So we are discussing the provision and we are also giving an example. So I'm discussing the provision for regulated product aggregate turnover of all the products. How much? 50 crore or more. Here 102. First condition satisfied. Now you have to check for second condition. What is second condition, friends? What is second condition? Covered product. It is 25 crore or more. What is the turnover here? 32. So answer is yes. Yes, only for what? Only for product B. Yes, only for what? Product B. Now we will go for applicability for table B product that is not regulated. Again the same definition. Are you able to follow? Again the same definition. What is the definition? Aggregate turnover of all the products exceed rupees 100 crore or more. What is the number? 100 crore or more. Tell my dear friends, is it 100 crore or more? Yes. Aggregate turnover of individual product exceed rupees 35 crore or more. What is this aggregate turnover of individual products covered? What is the turnover covered? 32 only. Is it 35? No. Since it is only 32, therefore, this is for since covered is less than 35, table B product is not applicable. That is product C will not come. That is which product only will come? Only product will come what? B. Only which product will come? B. So a case for a company, they have both A, both B, everything we have discussed. Consolidated case study. Maybe for your exam, they will come only table A products. They will come only table B products. So very easy. This is a consolidated case where you have to learn what? Two concepts. Number wise applicability checking plus also we are learning the provision. So provision, are you clear? Regulated product na 50, 25. Non-regulated na 135. Now, just like our cost record exemption, here also there are some exemptions. Here we have 3 exemptions for cost audit. There are 3 exemptions, which comes for exam also. What were the 3 exemptions for cost records, my dear friends? So cost audit, first exemption is what? If you are an resident. If you are a resident. It's also an MTP question, is an exam question also. See, some of the product are in SEZ, some of the product are not in SEZ. What is the answer? SEZ product is only exempted, non-SEZ is not exempted. Next one, electricity for captive use. Electricity for what? Captive use. You can highlight an exception also, we have discussed it. If you want to highlight in your notebook, you can highlight. Correct? In your material. Last, third exception. What is the third exception, my dear friends? Yes, electricity for captive use. Third exception is what? You are an exporter. You are an exporter. You are 75% of more revenue from export, and that too you have to receive in a foreign currency. How interesting. So 75% more revenue from export, and that too you have to get it in a foreign currency. In such a case, you are exempt from what? Cost audit only, not cost records. You're exempt from only what? Cost audit, not cost records. Are you clear? So we have discussed all the interesting points. See, in our class workbook, let me tell you this importance by I will continue the theory, but before that, let me tell you the importance. If I go through this point, see, in our class workbook, see, I have given you lot of case study. We discussed in our class example on applicability. With this example, you can applicability of companies cost record and audit rule. So from the example we discussed, we'll be able to tell whether rule 3 and rule 4. Rule 3 is what? Cost records. Rule 4 is what? Cost audit. So this is how this is the rule we discussed in our class. Any question we can able to do. Turnover of table A, turnover of B, turnover of other products. So total is coming what? Can you tell? 6 plus 9. What you're getting? 15. 15 plus 18. 33. So the aggregate turnover of all the product is what? 35 crore. So rule 3, rule 4, both are not applicable. Now coming next day, 7 plus 8 is 15. 15 plus 24, you will get what? 15 plus 24, you will get 39. So first point is what? First condition, aggregate turnover is what? 35 crore. So aggregate turnover is 35 crore or more. Accordingly, you can able to comment it. Yes or no? So here we have discussed this in detail in our class. So you can able to refer. So I don't want to discuss in each example and all. Already we discussed. Everything is considering. Everything, all these example only I discussed that before that case study. I discussed there. With this knowledge, you have to solve all these products. You have to solve all these products. This is very, very important. These are this is an example. Now I told it. This is an example. Here, this is an example for turnover. They are asking us to compute what is the turnover as per company's act. It's a previous year question. So this case study is very, very important. This area. This is also one previous year question. This is another previous year question. So that is what we have to tell it. Correct? So everything considering we discuss the provision. This whatever I discussed it, and provision only, you have to revise those questions very fast. Okay. Now we'll go for the next point. Yes, for you, cost audit is applicable. Now another important provision we are starting. For you, cost audit is applicable. First thing, cost record is applicable. The moment cost record is applicable, you have CRA 5 comes, that is your rule 5 comes. You have to maintain cost record in what? CRA 1. You have to maintain cost record in what? CRA. This is the first point. Now you have to appoint a cost auditor. The first point we have to learn is what? Timeline for appointment of a cost auditor. The first point we have to learn it is what? Timeline for appointment of cost auditor. See, here the point. First, you want to appoint a cost auditor. First, you want to appoint a cost auditor. Who can be appointed a cost auditor? You can appoint only a cost accountant in practice. They will ask you a question. A CA in practice, no. Cost audit is not available. Can you appoint? Answer is not what? No. Who is a cost accountant in practice? As per rule, to be a member of Institute of Cost Accounts of India who hold a valid certificate of practice. who hold a valid certificate of practice. So, can a cost accounting employment do a cost audit? It is also a reason. It will be what? Now, when you want to appoint timeline is 180 days from the commencement of the financial year in which cost audit is applicable. For cost audit is applicable within 180 days, you have to appoint. Next is, what is the procedure for appointment? See, first we have told that you have to appoint this in a CR2. For intimation to MCA, you have to intimate MCA. So we have to recall CRA1, CRA2, CRA3, CRA4, 2-mark MCQ. Anyone will come always 2-mark MCQ. So what is a procedure? You can't simply appoint. There is some steps for that. First step is proposal from company to appoint a cost auditor. This company has to give a proposal. Yes, we would like to appoint you as a cost auditor. Give your consent letter. Then cost auditor has to give his what? Consent letter. Once the consent letter is given by cost auditor, board of directors has the power. Next 2-mark question. Who will appoint a cost auditor? They will give the option. Board of directors, members in AGM, MCA or C&AG. You have to mention only what? Board of directors. So this role will come by board letter. Then you have to intimate the appointment to central government. How you will intimate? That is what we are told. You have to intimate in what? CRA. Sometimes the question will come. Contents of CRA2. Contents of CRA2. Contents of CRA3. That is all in our class workbook. I have given the format. CRA2 content will be what? What is the name of the company? CAN, mail ID of the company, name of the cost auditor, membership number of the cost auditor, financial year which you are appointing the cost auditor, which are all the products regulated, which are the products not regulated. These are all you have to speak. That's it. So once you done CRA2, who will appoint a board of directors you can be able to. Now once you appointed, then what you have to do? You have to intimate MCA. When you have to intimate MCA? Within 30 days from the appointment of the cost auditor or 180 days. Within 30 days or 180 days from the commencement, whichever is earlier. Whichever is earlier. In the regular class, we discussed lot of case study. If you appoint May 23rd, you know, 188th day will be what? September 27th, if not a leap year. September 27th. So if September 27th is the 180th day, you appointed within May 23rd. May 23rd, you have to check 2 days. Within 30 days, June 23rd or September 26th. Whichever is earlier, June 23rd, very good, you appointed. Next case, May 23rd. You are not appointed May 23rd, you are appointed September 10th. If you appointed September 10th, within 30 days is what? October 10th. October 10th. Here it is what? Now tell me whichever is earlier. Understand? This kind of case study question will come for 7 marks. Here, moving further, timeline we discuss how you intimate CRA2, contents of CRA2 we discussed it. Next, another regular question, tenure of a cost auditor. Next regular question is what? Tenure. Tenure is 180 days from the completion of the financial year. Correct? That is also the time. Or till he submit the cost audit report. Till he submit the cost audit report. Next question. If the statutory audit is not completed, can he extend the timeline? Answer is what? No. He can't extend the timeline. He has to submit, if any changes, he has to submit a revised report. So what is the timeline? Timeline is 180 days from the. See, can a cost auditor can be reappointed? Yes, he can be reappointed anytime. See, there is any cooling off period for a cost auditor? Main point, no. That is, companies audit and auditors rules. That provision is applicable only for what? Statutory auditor, not for cost auditor. That applicable only for what? Statutory auditor, not for cost auditor. So there is no provision. So there is no cooling off period. Is there any time limit for appointment or rotation? No. To whom the cost auditor has to submit the cost audit report? Very, very important. Cost auditor has to submit the report into board of directors. That is a company or board of, depends upon the option. MCQ. Right. Now, see which form the cost auditor has to submit. Cost auditor has to submit his form to company in CRA3. His form to company in what form? CRA3. Cost auditor has to submit his form in what? CRA3. Are you clear, friends? In CRA 3 only he has to submit. What are the contents of CRA 3? CRA 3 first whether it is qualified or not. What is the company? What is the financial? Which is the product covered? Then it has some annexure. What is an annexure? Annexure and all sometimes we come for part A, part B, part C, part D. Part A we have what? General information. Part B details of the manufacturing product. Part C details of the what? Service product. Part D only we have additional step. Part D para A product profitability statement. Para 2 profit reconciliation. Para 3 value addition. Para 4 ratio analysis and financial position. Para 5 related party. Para 6 indirect tax reconciliation. So these are all the point we can able to recall. Next we'll go for timeline for company to report. Company has to report within 30 days from the receipt of the cost audit report. In what form company has to report? Company has to report in what? CRA4. Company has to report in what? CRA4. So you have to now able to distinguish what is CRA1, what is CRA2, what is CRA3, what is CRA4. I hope you are clear. Going further, the next point, contents of CRA3, CRA4 we discussed it. Another every time coming question, reporting of fraud. Multiple time previous question. If cost auditor found any fraud during this audit, first he has to intimate the board. Board has to reply within 30 days. If it is not satisfied, then another 50 days he has to go for what? MCA. He has to intimate. So reporting of fraud is very, very important. Multiple time it came in the exam. Next, remuneration of a cost auditor. What is the remuneration of a cost auditor? This is very, very important. Very, very important. Who will fix the remuneration? Is it the board? Is it the board? Appointment only board. Remuneration is not the board, my dear friends. If a company have an audit committee, audit committee can recommend members in the general meeting only appoint. That is, members has to ratify. If there is no audit committee, board of directors can recommend, but members only can. Are you clear, friends? So this is the point. Next is who will remuneration? The remuneration of cost factor that also we have discussed. Are you clear? So this is the point on what this timeline, all these numbers. Apart from this, we have few more point. Resignation, removal, all those points. Can a cost auditor can resign? Answer is what? Yes, he can resign. Can a cost auditor can resign? Answer is what? Yes, he can resign. Can a cost auditor can be removed by the company? Yes, cost auditor can be removed by the company. There is nothing wrong in that. Company can remove the cost auditor also. Company can remove the cost auditor also. That is, company has to give a opportunity of being heard. Company has to give a opportunity of being heard. That's all. This is how the provisions relating to our cost audit. Majority of the point we have discussed. So now, yes, everything we can able to discuss. Now, what I have to tell you, my dear friends, this point of CRA1, CRA2, CRA3, CRA4, you should understand. Next is, if the cost auditor is that some failure in submitting the cost, some mistake has there, then penalty for the cost auditor. What is the penalty for the cost auditor, friends? Cost auditor, you can recall, my dear friends? No, if I'm not wrong, 10,000 to 1 lakh. Can you please check? It is 148. Section 148 is penalty for the cost auditor. Correct? Yes. This is 1 second. Same thing, 10,000 to 1 lakh only the penalty. But here, this small correction. Penalty for officer of the company. Officer of the company only 10,000 to 1 lakh. That is, if any company officer doing any non support or anything, then the officer have a penalty of what? 10,000 to 1 lakh. If the cost auditor, it will come 25,000 to 5 lakh. Apart from this, willful fraud, willful things, then company have a provision to refund the fees, then go for additional penalty. Go for additional penalty. So all the penalty provision I have written on this board together. You can take a photo or you can just note it very fast so that you can able to interrelate. If and whenever the question comes, you will be able to interrelate which penalty, what purpose, what is it about. There won't be no error you will have. There won't be no error you will have. Are you clear, friends? Now, this is how the main provision. In our class workbook, I have given lot of questions here. See, these are all already I have told. These questions is relating to what? Our provision. Now, other than that, general question I have given here. Firm appointed, then cost center fraud 143 during the course of audit, deficiency. What is a real estate? That is we told real estate, education, and all service is there. You have to go for that. So here told health sector, education. This is how the point. Aeronautical, construction, road. So real estate comes under construction industry and coverage only. Here you have telecommunication. These are all the different. So what you have to do now? You have to revise these question back. You have to revise these question back, my dear friends, once you are gone through the entire question. My dear friends, whatever we discussed now, that question also will come. Case study model question note, it come out 15 to 25 mark weightage. Whatever I told in this half an hour having a weightage of what? 15 to 25 mark weightage. That is you have to understand. You have to take it in a serious. Apart from that, basic question also sometime will come. Objectives of the cost audit. What is the idea behind the cost audit? Origin of the cost audit. That's not very easy. Sometimes they want to make you a little more comfortable in your paper. They may ask you the same way also. So you have to be learn, read and understand from the basics. This is comes in your ICMA material, Unit 1, Unit 2, Unit 3. This comes in your ICMA material, Unit 1, Unit 2, and Unit 3. This is how the area we are covered in our first sessions of our classes. So what I request you that I'll give you some time for you to rapidly, because I got little faster when I will give some time for you to go through your material. So you will be able to interrelate all these provisions. Once it's completed, we'll go for problem revision. We'll go for what? Problem revision. Come on, friends.